Also, I have created 6 accounts because the brokerage firms now allow you to have more than one margin account. So to be able to make following our trades and following what type of strategy we're doing and how that strategy is doing a little clearer, we have set up 6 different accounts. But for now, we're going to talk about how much money I am trading with and the 7 main strategies. Let's start with the 7 strategies, and then I will go over how much we're trading with regarding those strategies. So here at the Dorian Trader, we have 7 main strategies that we teach. Yeah, we do some other strategies from time to time, but we have 7 core strategies. The first is what we were just talking about a second ago, and that's the zero DT strategy. That is the day trade that we teach here at the Dorian Trader, and it's a statistical day trade, meaning that you have the probabilities on your side. It's about having the odds. When you're doing a traditional day trade, it's 50-50 at best because you're usually buying a stock and you're betting that it's going to go up based on your charts or whatever readings you're considering, but it's either going to go up or go down at that point, right? For day trades. Long term, you can always say that a stock like Google or something like that, long term, is going to drift up, but short term or a day trade is always 50-50. It's going to go up or go down once you put that trade on. With the statistical day trade, that's not the case, right? You can still win even though if it goes up, you can still win if it goes down, you can win if it just stays sideways. It's the way we structure that trade. And Dr. Meadows leads that for us. We think it's an amazing trade to learn, but it's the most difficult strategy. It's the most risk in that strategy because it's the shortest term, time frame, right? And that consists of more gamma risk, and that's with options. The more gamma risk, the more risky the trade is. But you can make a lot because the more risky it is, it means the more money you can potentially make, or it should mean that. And that's the case with our zero DT trade. And Dr. Meadows is phenomenal at it, and he teaches that statistical day trading course that I just mentioned. And I want you to check that out and study it until you can darn near teach it before you start trading it. Okay, we'll put a trade on here in a second with that. Actually, we should consider that right now. We have the S&P up 28 points. We got the SPX here, and if we go here and go to the zero DT trade and we look at what the straddle price is going for right now, it's going for about 35. Let's say 70 points. It will be 2 times the straddle price. So if we take this to the put side, that would be around 58.30. That's 70 points down. That's about a 9 delta. We go 20 points wide. That would be that. You can go longer. It tells you you can go wider. We tell you all the different ways you can do it in a statistical day trading course. And on the call side, we're going to go up 70 points. So that'd be about 59.70. That's about a 4 delta. And let's go 20 points wide. And you can see we're getting about 150 right there. We want to collect at least $100. So what we can potentially do, I do think we have a decent probability to go in a lot higher today, even $100. But I'm going to move the put side down a little bit and see if we get it closer to that 100. That's decent there. I don't think we're going to fall a lot. So I like this trade here. We're going to put this in, and we're going to put this into the zero DTE account here, and then we're going to send that, and we're going to count to 5, and then we're going to change the price so we're not filled by 5. So we got 1,000, 2 1,000, 3 1,000, 4 1,000, 5 1,000. So we're not filled yet. So I'm going to hit replace. I'm going to drop that down to 125. We should get filled right away. And there we go. And so this is the trade that we have on. What you want to do after that is you want to put in your stop losses. Dr. Meadows teaches it to put it in on the 58.25, the short strikes, and the 58.25 here. And so you can also do it based on the overall iron condor, or you can do it on the spreads, the put spread here or the call spread. I like to do it on the spreads initially, like to put it on the call side and put it on the put side individually, and then just let it play out that way. But for time purposes right now, I'm gonna let this sit for a second, and then we're gonna continue to talk. Right. So our next type of strategy is a 1 DTE trade. A 1 DTE means is that it expires in 1 day. And so you guys know here at the Dorian Trader, we have a special way that we put this trade on and how we structure it and how we manage it. And so our 1 DT trade can be just as profitable, absolute dollar wise, as the 0 DT one, because it's darn near a 0 DT trade the way we structure it, the time frame that we put it on, and the time frame we're trying to get out of the trade. And so if you're going to do that trade, which we're going to do our first one for 2025, during the witching hour, the last hour of trading today. If you're going to do that trade, you want to once again go over the course on that one as well, because it's a lot of risk involved. You got the overnight risk and you got some gamma risk, because it's almost like a 0DT trade for us, but it's a little easier. Maybe I shouldn't say a little easier. It's 50% easier the than the 0DT trade. Okay, it's 50% easier based on gamma risk and things like that. So it can be a great alternative to the 0DT trade, but you do have overnight risk, which the 0DT trade doesn't. And that's one of the nice things about a 0DT trade, especially the way Dr. Meadows does it. He kind of puts on the trade later in the day, kind of figures out what the market is doing, kind of see what direction the market is providing. Me, I like to put the trade on within a 0DT trade within the first 30 minutes, right? But it's a difference between the two. But a lot of you love the 1DT trade. I love it. I try to do it 3 to 4, sometimes 5 days a week. And so you want to learn that through the course, and you don't want to put any real money towards it, no more than 5K as you're learning it. Don't try to scale up too fast, because you want to have enough occurrences under your belt of adjusting things that go wrong, right? So our next strategy is our 7DT strategy. And this is my second favorite trade that we do here at the Dorian Traders. I call it my 1A. This is a trade that I've been doing for almost 2 years, and I call it the 7DT print money strategy, because for me and some of the members, it's literally been like printing money. I've made money every month over the almost 2 years, and I've won on every week that I did it except one. And that one week that I've lost was back in March of 2024, and that was after 52 weeks of winning. Okay? And so I'm going on almost another year of winning on this 7DT trade, which is just phenomenal to me. But once again, it's the course. If you learn the course, it's going to make the trade significantly easier for you to be able to manage. And then if you have really good discipline of not trading around certain economic data points, you're going to make the trade really, really easy on yourself. And we have a member named David that created a calendar for us, and that allows us to be able to see that kind of data out up front. So let me show you what I mean by that for you guys that are new. We go here to the 7DT channel here on our Discord, and we click on this pin up here. We have this calendar that David created for us. You go here and it pops up to our site here, and you can see that you have the third here, and then it's telling us here that we have this impact day here. So it's saying, okay, you're not going to do this trade today, this 7DT trade today, because you have an impact day that falls within these red days, the last 3 days, or the 2DT, 1DT, 0DT. Those are the most risky days. And so next week we have the unemployment rate coming out, so you don't want to do this trade for today. And this is the kind of risk management that we have, and a few other things that you guys know. All right, so that's the 7DT trade. The next type of trade that we do here at the Dorian Trader is the bread and butter trade. And the bread and butter trade is my favorite type of strategy. Bread and butter means it's a 30 to 60 day trade that we're selling primarily on indexes. Sometimes you can do it on stocks, but for me, it's primarily on the indexes, the S&P 500, the NASDAQ 100, the Russell 2000, but mostly the S&P 500, because it's less volatile than the other two. And I'm trying to be as far away as I possibly can be, so that I can win if the market goes up, the market goes down, and even if it goes down in a big way, I can still win as long as it doesn't go down in a significant big way. Then that's when you have some more issues, but you learn to adjust. So the bread and butter is the strategy that I used in my hedge fund for a decade. I love it, and I'm going to be doing it into perpetuity. And it's my favorite type of strategy, and we'll be doing a lot of those throughout 2025. The next type of strategy that we do here at the Dorian Trader is the safeguard strategy. And the safeguard strategy is literally what it's called. It's the safest strategy, in my opinion, regarding options or trading, period, because it combines the buy and hold with a option selling process that always, at the very least, lowers your cost basis. And so we have redesigned the wheel strategy and added 2 more strategies to it and call it the safeguard strategy. We originally called this the 1 day a month strategy to help you, to help members who don't have a lot of time to adjust and watch the markets, but want to make extra monies on their shares that they have. And so the safeguard strategy it's safe because it can allow you to hold until things come back if at the very worst, right? So if you have a good company, it's going to eventually come back. And if you do the safeguard strategy, which I like to do, and that's on indexes, you're not going to have to worry about it going out of business. And I usually like to do it on the S&P 500 or something very similar to the S&P 500. And so that allows me to be able to almost always outperform the market with the safeguard strategy. And we'll talk about that more later today when we talk about doing the safeguard strategy on BITO, okay, the ETF for Bitcoin. So the next strategy that we do, you guys, is a an earnings type of play. And this is the strategy that we buy most of the time. We play an earnings play, and then we try to have a probabilistic edge or quantitative edge on playing earnings. With the earnings plays, you guys, we try to do at least two earnings so that we have three outcomes if we trade two earnings, if we do it correctly. You can see the market is up quite a bit more now, which is good. We If we trade two earnings at the same time, we can either one, win on both, two, lose on both, or three, win on one and lose on one. Well, here at the Dorian Trade, if we structure the trade correctly, this earnings play correctly, we will win if we win on both, obviously, and we will win if we win on one and lose on one the way we structure the trade. So we should have a 66, we try to round it up to 68% chance of winning on every earnings play that we do, and about a 33% chance that we're going to lose. Right? And we'll see if that plays out throughout 2025. That's the way we're going to structure it. We're going to be disciplined about it, and we're going to make sure that it plays out that way. And if our math is correct, we should be able to be positive at the end of the year. We'll see how it plays out. And so our last strategy that we do here at the Dorian Trader, the seventh strategy, is what we call the long dated strategy. This is what Ernie leads for us. Ernie is one of the owners of the Dorian Trader, as is Dr. Metals. And Ernie does a long dated strategy that is typically called leaps, but we call it long dated because we are selling. Most leap strategies are a buying strategy. People buy it and they hold it and hope that something goes up. Well, Ernie is selling puts, usually a year or more out, or selling calls, naked calls, usually a strangle. He's not going to sell a naked call by itself, a year or more out, and he's trying to make money as the market goes up, or if it goes down, or it stays sideways. When he's doing a strangle, obviously he's having it. He wants it to stay within a range, right? So he's managing these positions that are usually a year or more out, and that allows him to be really far away. So most stocks that he does it on, he's doing it at a delta level of usually around a 5 delta, and that's 30, 40, 50, sometimes 70% away from where the stock is currently trading at. So that allows him to have a margin of safety for the stock to drop a lot or go up a lot, and he can still win. Right. And so the long dated strategy requires, to do it correctly, it requires a bigger size account. And you can do it at a smaller size account, but it's gonna eat up a lot more buying power, and that's fine if you're okay with that. But if you have an account that has portfolio margin, which Ernie does, it's going to allow you to trade that a lot more effectively. And so if you have a decent size account, something, if you're on Thinkorswim, account 125,000 at least, on TastyTrade 175,000, then you can do that strategy at a high level. If not, you can still do it, but you're gonna use a lot more of your capital, and that's fine if that's the way you want to build it up and learn, right? But it's going to give you a huge margin of safety because how far you are selling things out of the money. Stocks are going to have to move in a huge way to cause a problem for you. Okay. All right. So those are the 7 strategies that we have. And here at the Dorian Trader, we decided to create different accounts. Right. So that last strategy, Ernie is trading in a personal account that he's been trading with for a while, and he shares as much details as he possibly can in Discord. And a number of you have been following him and doing the strategy and doing some of the trades and things like that. Ernie updates us on a every other week basis during the live long dated program that we do here on Tuesdays, and so you'll be able to check that out. So, but also I have created 6 accounts because the brokerage firms now allow you to have more than one margin account. So to be able to make following our trades and following what type of strategy we're doing and how that strategy is doing a little clearer, we have set up 6 different accounts. Okay, we have set up 6 different accounts and threw some monies in some of the accounts. So for example, here we have set up the 0DT account, right? And this is the 0DT account here. We have put 5K in there. That's what most members start with. So we put that there. On the 7DT account, this used to be in the Thinkorswim account for us. We switched it over for this year. We've grown this 7DT account from 5,000 to a little over 16,000, as you guys can see. And then we have the safeguard strategy here. This is where we talked about being our safest strategy. We got about 17,000 in this account, and we're going to be trading only about 4 different underlines. We'll be in BITO, and we'll be in TLT, and we'll be in TQQ, and then we'll also trade UPRO. Okay, we'll also trade UPRO. So those are the 4 different underlines we're going to focus on in the safety strategy and these demonstration accounts for us. Okay, and then the last here on the TastyTrade accounts, we're going to have a 1DTE trading account, right? And that we grew that last year from 5,000 to a little over 11,500, as you can see here. And so we're going to trade with that. This starting this afternoon during the witching hour, we'll put on our first trade with there. Then if we jump over here to the Thinkorswim account, we're going to have 2 different accounts in here. We're going to have our earnings play. This is the one that we're not as certain about. This is more of an engagement play, but we want to see if we can learn, if we can make this a quantitative approach for us. We'll be able to determine that throughout 2025. But in this one, we're starting with just 2,000, and we'll play around with it and see if we can get that to grow. The key is just to get that to grow and be engagement to the earnings play. The earnings type of strategy is the only one we primarily buy at, right? We're a primary buyer of options for the earnings play, so we can define our risk completely. Okay, and then we have the bread and butter account. So most members start with 5K, so we're going to start with 5K in the bread and butter account, and we're going to do that here in Thinkorswim, primarily trading the ES options on futures and some oil, some natural gas, things like that, but primarily the ES, the S&P 500. So these are the 6 accounts that we're going to provide updates on throughout 2025 and see how we do. We'll provide statements, and you guys will be able to see the accounts the way we're showing at this point, so that we can see how these strategies are going. And our goal is to build these organically. I believe we'll be positive on all of them. Besides, the earnings plays, we'll see if we can be positive on the earnings plays. But regardless, I do understand that we're not going to be positive every year. That is our goal, is to be positive every year. But you'll be able to determine what strategy works for you. We believe at least one of these 7 will work for you, for your temperament. At the very least, the safeguard. We should all be doing at least the safeguard type of strategy if we are buyers of shares, because then you can always lower your cost basis. And if you're doing it once again on indexes, that can keep the volatility of your portfolio a lot lower, because you're following the S&P 500, for example, right? If your bread and butter stock is a Tesla, well, it can go up 300, 400, 500%. Sometimes it's been more than that, or it can go down 70%. So just using Tesla as an example, everyone, not to beat up on Tesla, just saying it's a lot more volatile type of stock, right? Well, for me, for safeguard, I want to be in things that, and Tesla might be that for you, but I want to be in things that I believe is going to be around into perpetuity, and that the volatility is a little more manageable. And for me, that's the S&P 500. I am an S&P 500 trader, and that's what I did in the fund for a decade, and that's what I primarily try to do here at the Dorian Trader.